Our next guest says that even in these tough economic times, it is important to have a smart financial plan. Jim Ian is a financial planner with Barnum Financial Group. He also teaches financial planning courses for area businesses. Welcome, Jim. It's great to have you back with us.
Thanks, Jocelyn. Great to see you again.
All right. This is a time when people really need to have a financial plan?
They sure do. Obviously, things are very, very difficult, and there's a lot of anxiety out there in the marketplace. And what a financial plan will do for you, whether you're saving and you're in accumulation mode or whether you're a retiree, is it allows you to have that disciplined strategy that gets you through these tough times.
But do you find that people are still not doing this?
They're not. A lot of people are, I should say, but many people are having challenges where we're back to burying our head in the sand, and there's a lot of fear that's out there. So my concern as a practicing financial planner is that we're getting back to a place where we're not opening our statements and we're sort of dealing with this through avoidance. If you've sort of gotten off track with your financial plan, it's very important to readdress where you are today relative to those goals that are important to you. Like I mentioned, whether it's educating a child or whether it's retirement, if you've gotten a little bit derailed because of this most recent market volatility, that disciplined plan will help you get back on track.
All right, you talk about systematic savings. What exactly is that?
Yeah, systematic savings is so important because goal number one is we all have to pay the bills, and we understand that. Mm-hmm. Financial planning isn't about telling you how to spend your money. It's there to say if these future goals are important to you, this is what you need to save on either a monthly or an annual basis. So systematic savings is something we do in specific intervals. A lot of folks, it's through their 401ks, maybe through other traditional retirement plans or education savings. But by putting it away on a monthly basis, which is what I like to see people do, they're treating their savings like an expense. They're paying themselves first, and then what they tend to do, individuals learn to live on the rest.
So where do you start? How do you start?
Yeah, you know, most companies that are out there will allow you to save systematically with as little as $50 a month. So it starts by interacting with a financial planner, somebody like myself that can give you coaching and that kind of advice, and again, help you determine what you really need to be doing on a monthly basis. And then set it up. It's as simple as opening that account, having them pull that out of your checking account on a monthly basis, and I think what you'll be surprised to see is you wake up, whether it's 3 years from now, 5 years from now, 10 years from now, and realize you've had some financial success.
You mentioned $50 amount. It really does accumulate, doesn't it?
It certainly does. You know, rule of 72. Rule of 72 says take the amount of money that you have, look at the rate of return, divide it into 72, and that's how long it takes for your money to double. So say you're getting a 6% rate of return. 6 times 12, 72. Every 12 years, that money will double. And that's what gets you excited about savings. You know, even my 11 and 9-year-old, I walk them through the rule of 72 and get them motivated to save. But you're right, even a little bit will compound over time, and you'll accumulate wealth.
And as we all know, we're in this tight economy. As it improves, should you put in more?
Well, it's interesting that you say that. I'm glad you asked that question because I've heard from so many people, should I stop my savings plan? Should I not contribute to my 401k because the market is so volatile? And it's actually the opposite. What we'd really like to see people doing is obviously continue to save that amount, but maybe even save more because they're buying in what? At a lower value. So they're getting more shares for that amount of money that they're putting away if they're going into an equity investment. So it really comes down to you put away what you can and you stick to it.
All right, so how do we create a budget? Where do you start?
Yeah, you know, budgeting, some people will embrace the idea of budgeting. I meet folks and they have a fantastic budget that they've worked through. It's on their Excel spreadsheet.
Yeah, I was thinking, I can see, I visualize a spreadsheet.
And some people will do that, and others really have a difficult time putting a budget together. So it really starts with, you know, if you have a significant other, sit down at the kitchen table, really put pen to paper and write down what is it that you're spending on your committed expenses, which is your mortgage, your rent, your
fixed
utilities,
amount.
Your fixed amount, those amounts that you have to pay regardless of what's going on out there in the world. And then your discretionary expenses are going to be the savings, the personal spending, travel, entertainment, and try to get a sense of what it is that you spend on a monthly basis. That budget then is your starting point. You can then determine what you have coming in, what you have going out, and what the differential is.
It can be quite shocking. It's a reality check when you take a look and see where your money is actually going.
Well, you look at it, and everybody has their fix, right, or their addictions. My wife's is Starbucks. That's exactly right. So, you know, whether it's going to Starbucks on a daily basis or whether, you know, you're going out to eat, at least know where your money's going. I'm not saying you have to cut that out of your budget, but if money is tight and you're not able to save towards those future goals, it might be something that you need to readdress.
What's key to really maintaining this budget, making sure you follow it?
Yeah. Discipline first and foremost, getting a commitment around it. I think when you start to see the benefit of saving on a monthly basis, you get excited about budgeting. You want to free up money that you can put away towards those goals. Getting your spouse, if there's somebody else that's involved in this budget, on the same page, making sure that, that you're both really committed to it and readdressing it. I think it's something that most people need to take a closer look at on a quarterly basis, because things will change, expenses will adjust, and lastly, have a cash reserve. Because I think what derails people is what I mean by that, have some dollars, 3 to 6 months of committed expenses. Try to save that and just hold it in cash. So if a big ticket item comes up,
you've got the money?
You've got the money.
Very good.
Doesn't derail your budget.
For more information, all you have to do is contact Jim Ian at this number, 203-689-9011.
That's right.
Or email at jian@metlife.com.
That's right.
Very good, Jim. It's always great to have you with us.
Okay, Jocelyn, great to see you again. Thanks for having me.
You're welcome.